Today, we'll discuss why Snap is not just a great investment, but a great investment into your future.
Hello, everyone. My name is Cynthia Lee. I am here to pitch and tell you about Payoneer, which is an international digital and commerce enabling platform for international commerce and transactions.
Thank you guys for joining us today. Anna and I will be covering McDonald Corporation, also known by its New York Stock Exchange ticker MCD.
So hello, everyone. Thank you for coming today. I'm excited to talk to the Nike board and pitch this exciting new product to you all.
First, what is Snap? Though I think many of us already know of the social media company, it's helpful to know that Snap describes themselves as a camera company, which is pretty interesting. They use this in their app called Snapchat, where you can take photos and videos and post them to a story that shares with your network. And then you can save these stories to a function called memories.
Payoneer facilitates international digital businesses, online merchants, and online marketplaces worldwide, and it operates in over 190 countries and territories. As you can see on the chart on the right, from IPO to date, it is trading at around the same from range of like $9 to around $11.
As of today, there are over 110,000 McDonald's restaurants, making it the largest restaurant chain in the world. Its current CEO is Chris Kempczinski, and its overall business strategy is to increase sale volume while also delivering food and beverages quickly and effectively.
Here at Nike, we've seen some drastic changes due to COVID. Our free content and celebrity endorsed campaign, Play Inside, Play for the World, has encouraged athletes across the globe to stay active indoors, helping us to boost our membership and online sales.
Snap stock popped because of three main reasons. Daily active users increased to 293 million in Q2, which is up 23% annually, and revenue more than doubled to $982 million.
So why this industry? Why the fintech digital payment industry? As we can see, the digitalization and globalization of commerce worldwide, internationally, has grown tremendously over the years, and we are expecting it to grow at a CAGR of 14% in the next few years from 2021 to 2025 as well.
We believe that in our current times, the capital markets are really volatile. This has a lot to do with news surrounding the Delta variant, as well as uncertainty around inflation. So we believe that McDonald's investment in relevant marketing content, as well as stock price being undervalued, would generate a great source of stable as well as resistant income to our investors.
So we've developed a new personal home gym experience, a transparent device that allows consumers to connect to our digital platform like never before. So with 60 plus activity levels, personal coaching from Nike training masters, and monthly celebrity host workouts, Nike can increase brand loyalty and generate millions of dollars in sales.
Both of these metrics crushed analyst expectations, sending Snap stock up and up and up. And Snap earnings per share also increased from a projected loss of 1 cent to a positive 10-cent gain.
So why Payoneer? Payoneer is very well positioned to capture this growth in international commerce, especially in the digital space.
Because the McDonald's PE ratio is below average, which means that the price of McDonald's is not overvalued.
So currently, our Nike digital growth has increased 50% over fiscal year 2020, generating $3.8 billion in sales growth. We have predicted a 60% increase by 2025 through digital. And with Nike's base, we can see a 40% increase in Nike-owned digital.
Now, how was Snap able to beat these expectations? Lockdowns ending allowed for users to begin posting more content as they travel. They were able to get out of the house. They were experiencing different things, going to concerts again as things were opening up, things like that. Even just socializing with friends and family, that increased people's willingness to post on their stories.
In addition to that, Payoneer has a mission to make international transactions and payouts easier for international merchants. And this is very attractive to both marketplaces and international sellers.
To build on Anna's point that McDonald's is undervalued, we wanted to find a target price that would suit McDonald's current risk. So we decided to use the dividend growth analysis, and we made some assumptions as to what McDonald's was worth.
As Daisy mentioned earlier, our main goal is to obtain 400 million members. We can achieve this goal through Project Base. Nike has a CapEx of 500 million. Based on our research, this project will cost 400 million, which is below our CapEx. This tells us that we can take on the project. Our projected payback is 2. Therefore, in 2 years, we will obtain the money from our initial investment through our increasing sales.
Snap was also able to beat expectations because of the low impact of the Apple privacy update on the Snap platform, but it didn't actually impact Snap as much as they thought it was going to. So that also helped them beat expectations.
Just wrapping it up, why now? Why invest in Payoneer? Why now? Traders in the SPAC market are not expecting, and they're not looking at Payoneer in a long-term growth perspective. They're looking at whether a SPAC has announced a merger, they see that it popped off, they sell it off, and that's it. This is why Payoneer is very undervalued right now, because a lot of the investors are looking at it as a SPAC. They're not looking at it as a long-term growth potential.
So with a beta of 0.63 and a 10-year treasury yield of 1.25 and an expected market return of 11%, we calculate a WACC of 6.42%. Using the WACC as well as the dividend CAGR of 4.45%, we came with a target price of $273.13.
Our project is an excellent investment because fitness is becoming very popular among people. We witnessed last year during COVID the increasing demand for fitness videos and equipment. With the Tokyo Olympics, people will become more motivated to work out. If we take this project, we project an increase of $4.5 billion in sales. And let's be honest, who wouldn't want to be trained and receive tips from Nike's top athletes?
So keeping in mind everything we learned about Snap today, I'd like to again implore you to look at Snap as a prime investment opportunity. Looking forward, Snap is not just going to grow fiscally, but it's going to grow socially. So create an impact on your future by making investing in Snap a memory today.